This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live as always from the CNBC TV18 Motilal Oswal studios. It's a fresh new week, Monday morning, a rainy morning, as we've gotten used to over the last many weeks. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Morning.
Good morning. So it's a brand new week, but lots to react to this morning, right? There's ICICI Bank, there's Kotak Mahindra Bank, there's Reliance, and there's a big US Fed meeting coming up in the next few days as well. So we have our hands full. As we always have.
I thought we were going to start with Barbie, Oppenheimer. I mean, who did what? Nothing?
I watched Oppenheimer this weekend.
I did too.
Both of you loved it, I think.
And what do you think of it?
I thought it was great. But I'm a big Christopher Nolan fan. I thought it was too long, 3 hours, but gripping. I mean, fantastic storytelling.
I don't know, unpopular opinion, but I wasn't... I think I was a bit underwhelmed. There were a couple of scenes which were good, the main scene, but apart from that, I could have easily just caught it on Netflix or something.
So I've got an excuse to skip it.
I'm a big Nolan fan as well. I think there was so much hype about this movie that eventually when you go in there, it was a bit underwhelming and very, very long.
I watched the 7 a.m. movie, Sonia. So I think that's the earliest I've gone into a theatre. I watched the Mission Impossible as well. But that is, I mean, anyway.
So I watched the 11:30 in the night movie, by the way.
Night.
So I was asleep by the time the climax came through. I was asleep.
Nigel, don't miss it, by the way.
Yeah, I'll give it a go. And our producer as well is telling us, Anurag, he's saying he went for it at 12 midnight. So he was, in that sense, he was a little earlier on the day.
We'll ask him how he liked the movie as well.
Absolutely. Well, more reviews coming up through the course of the day, but let's quickly tell you what you need to know as we begin another trading session. We kind of begin with earnings once again. And I say again because on Friday morning, we came back and reacted to Infosys earnings in a big way. That tryst with the 20,000 mark on the Nifty could not happen because of Infi. It took the entire tech sector down. But today, this morning, it's a fresh set of earnings. There is Reliance, there is ICICI Bank, and then there is Kotak Bank as well. Actually, it's the Reliance on one side. Numbers are a little mixed, really. It's not seen... I've seen some earnings downgrades and, some kind of hand-wringing about what this may mean for stock performance from here on. A lot of people are pointing to the GDR, which was down about 5.5%. But let me tell you, GDRs, I think they lost relevance, real relevance in terms of price signaling, at least, I think, 10, 15 years ago. Very, very thinly traded. Stock, anyway, was down about 3% or so on Friday. So perhaps it is... taking some of the damage, perhaps it kind of priced at it early on. So that is Reliance. In any case, it doesn't help on the upside. Does it hurt in any meaningful way? I don't think so. We can discuss more about Reliance, and we've got a discussion lined up a little later here on the program. On the other side, ICICI Bank and Kotak are interesting as well because ICICI is steady as ever. Actually, spotless performance once again, and ICICI Bank is creating records of sort. We'll talk more about that. Kotak also did well. Especially on the deposit growth front, people were surprised very positively. The niggle really is that both have seen very minor earnings upgrades, if any at all. Actually, I saw some downgrades for Kotak as well. ICICI Bank, people were expecting very strong and they got very strong. So we've seen very minor earnings upgrades. CLSA, for example, has moved up their estimates by less than 1%. So those kinds. And earnings estimates being moved up is basically what causes stocks to move higher or, down on the other side as well. So that's, but it doesn't hurt. That's the point. ICICI and Kotak Bank, perhaps how much can it help on the upside? We'll wait and watch. In global cues, Friday's session in the US market was kind of flattish, so not very much to take away from that. But this week is a big one. You've got the Fed decision. The FOMC is all set to hike by 25 basis points. The decision is on Wednesday. We react to it on Thursday morning. The big question, though, is this the last hike in this tightening cycle? And we'll have to kind of wait and watch for that one. The presser will be important as well. It's a big week for tech earnings in the US as well. So Microsoft and Google report on Tuesday and Meta reports on Wednesday. And this is especially important because it's been a narrow rally which has been broadening out, but this is still a very large FANG tech-led rally out there in the US. Now, let's come back to levels that you need to watch out for. I'm going to put support levels here on the upside. We all kind of know targets, etc. Support for the Nifty comes in first at, and I put this level out on Friday morning as well, 19,620, 19,600 roughly. That's the hourly exponential moving average for the Nifty, the 40. The 20-day comes in below that at about 19,400. 19,372 is the precise exact number. So let's see if it comes to a point where any of these levels are tested. On the bank Nifty, the near-term support comes in at 45,630 or so, and there we left off at about 46,075. These are near-term supports for both the Nifty and the bank Nifty. Many, after Friday's big correction, many are saying, well, this is it, and this is the start of a steep decline, etc. From where I'm sitting, how I'm looking at things, it doesn't seem like that. Maybe a bit of a pullback, sideways action after the strong price performance, but doesn't look like we're starting something very large or meaningful on the downside. The GIFT Nifty implied opening up on your screen, it's indicating a lower start. Sonia.
Oh, absolutely. I just want to take some of these points forward because as we know, the market is going to start in the red this morning. All eyes are going to be on ICICI Bank and Kotak Mahindra Bank. But in that context, just a couple of points. Yes, the ICICI Bank numbers are very good. In fact, they're best-in-class numbers, better than what we saw from HDFC Bank as well. But how much of it is already in the price is the question, right? Because ICICI Bank, just look at the numbers. Deposit growth of 18%, asset quality has improved. But the stock has also gone up about 20% since the month of March. And there is a drop in the net interest margin sequentially. So that is a bit of a concern that you have to keep on your radar. So the big question on my mind is, can ICICI Bank re-rate further? Because it's already seen a big up move of around 20% So that's the big question. On Kotak Mahindra Bank as well, robust loan growth, 17.5% year-on-year. Net interest margins are strong. It's a good stock, but the stock is expensive now. So are these numbers good enough for the stock to see higher valuations? Time will tell. There's also that, overhang about Uday Kotak. So that's something that the street has sort of penciled in the last many weeks and months. So just keep these two stocks on your radar. For Reliance Industries, it's a mixed bag, no two ways about that. The consumer businesses are doing well. The O2C business has, some pressure points. So that is perhaps something that the street could factor in. But if you look at what happened on Friday, there was big buying by domestic institutions. So they bought about 1,290 crores in the cash markets, but the selling from FIs was more than that. So in that context, perhaps today could be another red day where you could have Reliance and Infosys perhaps drag the market a bit, but supported by Kotak Mahindra Bank and ICICI Bank. Now, all eyes on the Fed meeting, as Prashant was also saying, there's a rate hike that's expected. But apart from that, there are important earnings this week. There is Tata Motors and Bajaj Auto tomorrow. On Wednesday, you have a string of earnings from the Nifty. There's Axis Bank, Cipla, Dr. Reddy's, Tech Mahindra and Bajaj Finance. So we have a handful in terms of earnings to react to. But let's see which way it goes from here. There are plenty of other numbers as well that we'll be reacting to. There's Paytm, there's HDFC Live. So we'll talk more about that later.
Well, that's right. Sonia, the bulls, they'll be pinning their hopes on the Nifty Bank because as you said, Reliance Industries, well, it could move sideways, maybe a little bit of a downtick. And you have the IT stocks, well, they could consolidate as well in the near term after the selling that we saw in Friday's trading session. So the bulls, they pin their hopes on the Nifty Bank, courtesy, ICICI Bank's numbers, Kotak Mahindra Bank's numbers as well. The US markets, well, they have been on a bit of a winning streak, but the dollar index is, inching up. It's moved to around 101 odd. That's normally a sign of caution for emerging markets, and we are included in that as well. So it's gained close to around 1.5% just in the last couple of sessions. And we have big, central bank meets this week. We have the Fed, the ECB, as well as the Bank of Japan. The IT index, well, that one is only around 0.5% or nearly around 120 points away from its 20-day MA, which at the index level, that's the first level of support out there. Flows were a little bit disappointing. The FI is sold. And if you look at the FI and the DI numbers together, the institutions were net sellers to the tune of around 700 crores. We were used to, in the month of July itself, on an average, we were seeing 700 crores of inflows. So the swing factor out there is nearly around 1,400 crores. The FI as well, they added some bearish bets as well in the FNO market. And I'll say this is not such a bad thing. So they added some shorts. They added close to around 7,000 short contracts. They unbound some long positions. They continue to remain net long at around 68% odd, but that's come down from nearly around 80% odd, which is good news. You want some shorts in the system. What's telling you that higher levels we could see some supply is the way there were calls that were written. More than 3 lakh call contracts were written in the ratio of 2:1, and two strikes were very active. 19,900 call, 19,800 call. Between them, they added more than a crore shares odd, which brings us to the level. Since we saw writing at higher calls, well, then that 19,900 odd level, that becomes a bit of a resistance on the upside. The PCR has cooled down to around 0.9. We were making this point from around 1.5, 1.6. It's cooled down to around 0.9. Normally, it bottoms out at around 0.7 odd. Getting to the levels, support we get in at around 19,650 to around 19,680. That's the broad range. The gift Nifty suggesting that we start off with a cut of around 60 to 70 points, I think so. The last time I checked, 70-point downtake. So importantly, if you're going long, then that 19,650 odd level should hold out. And the Nifty bank, that'll be the crucial one from the bulls.
Okay, we have plenty to reckon with. So without wasting any time, let's kickstart the show with some equity views coming through. We have Chetan Seth of Nomura, who says the main focus for the markets this week will be on some major policy decision in the US, China and Japan. While the Fed is widely expected to raise rates, he believes Fed Chair Jerome Powell will not have enough reasons to sound even more hawkish than some of his previous comments. He adds that even if the Fed downplays recent disinflationary trends and comes out hawkish, it will likely have a limited, short-lived negative impact on stocks.
Okay, let's get you some money market views here. B. Prasanna of ICICI Bank says the dollar recovered after stronger U.S. labor and consumer sentiment data ahead of the FOMC. He says softer inflation prints and dovish pre-policy comments weakened the pound and the Japanese yen, while the Chinese yuan was supported by stronger PBOC fixings. He adds the rupee traded with an appreciation bias backed by strong inflows in equity, and the RBI was seen aggressively protecting appreciation by buying dollar around the 82 levels. He says for this week, FOMC and Bank of Japan meetings will give cues to currencies, and he expects the rupee to trade between 81.9 to 82.4 to a dollar.
All right, that's on the rupee. On the bonds, B. Prasanna says that the global yields consolidated post a sharp rally witnessed over the last couple of weeks, awaiting cues from the upcoming Fed policy. Back home, strong investor demand has kept yields supported. He expects the bond market to remain range-bound within the 10-year benchmark bond yield, trading in a range of 7.05 to 7.15% range.
Well, we have a lot of stock-specific action track for you. Get to that in just a bit from now in our special Top 10 segment. But let's list out the stocks. We're looking at Reliance Industries, ICICI Bank, Kotak Mahindra Bank, RBL Bank, DLF. We also have a few more stocks that we should be looking at. Credit Access, Grumman, they are all stocks that will be reacting to positive news flow. On the flip side, Vedanta, Paytm, IGL, AU Small Finance Bank will be reacting to negative news flow.